All right, the recording is rolling. Thank you guys. Thank you everybody who is here today on a Tuesday night. Today is October 25th, 2022. We're going to be looking at pretty much everything like we were talking about earlier. Going to be looking at some crypto. We're going to be looking at some indices and then commodities as well over on the gold side. I kind of wanted to talk about what had happened today, how we could look for that to occur, as well as what I'm expecting or looking for price to behave like the rest of the week and into next week as far as we go. We're going to go ahead and start it off with ETH and with Bitcoin, and then we will get into US30, and then at the end we will get into XAU as well. If you guys have any questions or anything like that during, feel free to let me know and I'll go ahead and answer those for you. You can ask me anywhere. You can unmute yourselves. If you can't unmute yourselves, then I'll go ahead and unmute you. But if you guys have questions during, feel free to let me know. This is when I can answer them live for you, and we can go over exactly what you're looking at, why you're looking at it, and we can get those questions answered. So we'll start off with ETH and Bitcoin, and then we'll get into the others like we had said. So starting off with ETH, and you guys know, as institutional traders, as someone who looks for that plan, my plan starts with top-down analysis from a market structure perspective. All right, so I always start on the weekly time frame, and then I go to the daily and then lower from there. Now, looking at the weekly time frame, notice how price came up, made that higher high right here, and then it came up and made a lower high and then a lower low. It closed underneath this low right here, so we have a lower low on the weekly time frame. What this means is that until we break these highs right here, or this high right here, I'm not looking for full continuation higher into supply. Yes, we had a good move today, but that could possibly get right those longs into trades, putting their stop losses underneath these lows, and we'll talk about the daily time frame as well. But as price starts to move higher back into premium of this low that caused this high right here, as well as premium of where this supply was created internally. And what I mean by that is now from the weekly to the daily, if we go ahead and take a look at the daily chart right here, we can see our premium and discount, premium here, discount down here. We talked about that 2-day fair value gap. Here's the daily fair value gap, which is what has been refined to. This is the spot chart. But as you can see here, and I'll put this back, price came down, made a low, created that new high, and then we broke structure, came up, filled that area of fair value, that area of imbalance, and then created a new internal low, which we can see right here. So the start of that was from this institutional candle here that had ran the highs, as well as the drop base drop, right? That creation of supply on the 4-hour time frame, the 1-hour time frame, lower time frames to show us that supply was created within these areas. So as long as price comes up to these areas, starts to hold premium, show that it is creating sell side liquidity, so we can see some form of equal lows, whether it is trend line liquidity, whether it is just strictly straight equal lows, right? Whatever we're looking at as far as the liquidity perspective, we can start to look for that sell side liquidity buildup as we come higher into these areas, and then we can look for price to continue down. What that's going to do is now get people into shorts and take out all the longs who tried to get in on this pump, and then we look for that full delivery higher after that into all of these highs here. We're looking for these this push up into this area to create buy side liquidity. So at the same time as creating sell side liquidity and then taking that out, breaking structure to the downside, we're creating buy side liquidity on the way down, a reason to come back up after we come lower back into discount. The only reason I say that is because we left these daily equal lows behind, and we're still overall on the weekly time frame bearish. On the daily chart here, we can see that we made a break of structure to the upside, came back down, liquidated those early longs, and then started to move higher. So the daily break of structure to the upside then caused the weekly pullback. So what we would do once we come into those areas of daily supply is look for that 4-hour structure to show us that higher high creation, and then the lower low, lower high, and then the new lower low for the creation of supply. We'll look for price to come back into it, and then we can take it lower into these lows here, as well as our area of interest. But if we break these, with displacement and close over them, then I'll be looking for higher continuation for reaccumulation. So we can keep it as simple as possible as we are coming up into these areas of supply and into premium. But let's talk about how we could have looked to catch this play as far as what was happening within here. Right? Something, and a good rule of thumb for people who are trying to practice Wyckoff or get into Wyckoff, with accumulation, they're going to take a lot longer than your distributions are. And what I mean by that is notice how long it took for us to distribute once we came into areas of premium from this high that caused this low right here. So it is right here. We had one pump up, two pumps up, and then the third, right? 1, 2, 3, and then the distribution to the downside all the way back into discount. And then when we came into discount, we started to see price, right, create those areas of sell side liquidity. So we have our first mitigation, early longs who are trying to get into trades. Those early longs are taken out. We see the break of structure to the upside, the demand creation, and then price starts its move back up into premium. So let's go to a lower time frame now. Where did that 4-hour break occur? After the liquidation, break of structure to the upside, institutional candle, and then demand. And then price came down, showed the break of structure to the upside, double break came in play as well. And I'll take this off for just 1 second. But we had our first move to the downside. Our institutional candle was created on this move to the downside on higher time frames, and then our double break. So 1, 2, candle before right here, we can see it delivered right back into that area of demand and then started its move higher. On the lower time frames, and I'll show from the H4 to the H1. Let's go back. Let's put our play back up. Perfect. So H4 break right here. We can look for H1 following. After our first mitigation, we look for the liquidation to take out the early longs. First liquidation comes here, break a structure to the upside immediately after. You now have your area of demand. So from the H4 to now the H1, candle before, you can see it delivered into that beautifully and then had its move away from that. But as accumulation occurs, and what this means is we leave highs behind and we manipulate lows. Notice how we were constantly respecting supply, right? We took out highs here, created new supply, respected this supply here. So we have buy side liquidity over this high, and then we see more lows created. Lows were created, more buy side liquidity, right? Those equal highs that we can see are being formed as price continues to make its move to the downside. What this does is, remember, get retail now into those trades to the downside, making them believe that price is going to go short. And then following that, yes sir, following that, we see the continued move to the downside. So the liquidation, and then that gets people into all of those shorts. They're like, oh my goodness, it's going to go to the downside. It's moving so quickly, right? We see these hourly candles to the downside. But then what do we see after? That break is structured to the upside. This now gives reason for price to move into that buy side liquidity. We've manipulated lows, left highs, and showed the break of structure to the upside. So we're creating demand. But overall, I'm still looking bearish. And the reason for that is because we are still creating lower highs and lower lows. This weekly pullback, right, that daily break of structure to the upside, on this move right here, this is going to be what tells me. And the reason I say that is because if we close with displacement over these highs, and then our 4-hour trend as we come back into areas of demand show the same exact thing we showed here, and we leave the supply behind, then I'll be looking for continuation to the upside. But because we are showing this behavior that seems very lethargic on these moves to the upside, and we're still in that overall bearish trend, right? Still creating lower highs, lower lows. Nothing has shown us that bullish breakout quite yet. This could be that one final move that gets people into long trades before the final liquidation and then the move to the upside, right? We can see one move right here, another right here. This could be that power of 3 into our area of interest, our point of interest. But yes, overall, still looking bearish until we have continued breaks of structures to the upside of these highs right here. Then I'll be looking for continuation to the upside. But until that happens, I'll be looking for shorts as we come into these areas right here. If I go ahead and go look at Bitcoin, and I'll go ahead and take this off so we can see what I am talking about. I'll take this off as well. But we can talk about how this was caught, how this was drawn up as well. But on this move to the downside right here, you can see we're holding discount. The weekly chart still making lower lows. We created a lower low right here, lower high, lower low. So we could be coming up to take out this buy side liquidity to then create new supply, to then take out all of these longs for our final goal, right? Our monthly goal into these lows right here. I'll pull up the monthly chart as well, so we can see the monthly, those equal lows that we have, monthly fair value gap as well. Monthly is still bearish. We can look for a price to hold this supply, continue down. Weekly still bearish as well, still creating lower highs. No higher high has been created yet. Daily, higher highs were created, right? This was the lowest point that made this highest high. Price came back into those areas, liquidated the lows, and then broke structure to the upside. I'll show the 4 hour so we can show what that looks like. We saw the liquidation and then the move to the upside. Let's look at the 1 hour. Same exact thing we were showing with ETH, right? Where we had a liquidation and then the break of structure, and then price had that move to the upside. So now you guys can start to see why personally, right, I don't play limits. Limits can definitely be something that are played, but since I'm looking for higher time frame structure, I don't like to play limits all the time. Now, what is wrong with waiting for the break of structure to the upside and then setting limits at your zone? Nothing really, right? But the reason I don't set limits is because I wait for the confirmation. So I wait for price to come into the zone and then wait for the break of structure after that, because price could just come into the zone and close into your zone and then continue to break structure to the downside, because it's overall, right, still bearish. But in instances like this where we can wait for the confirmation of our zones, then we can start to enter those trades to the upside, and we can set limits here or set limits here, right, into your demand zones after you have that full confirmation. So when I talk about limit trades, that is what I mean, right? I say, okay, price first comes into the zone, and then I wait for the manipulation of that zone to then show the new demand or supply that is being entered. But on this move to the upside, we had a break of structure. We had our 1, 2, 3, right? Break of structure to the upside. And what I mean by 1, 2, 3 is the 1, 2, 3 candle entry. We have this area of imbalance, area of fair value, came right back, filled that 50% perfectly, liquidated traders to the downside, and then broke structure to the upside. What do we look for right after that? Candle before candle. All right, we can see price came into that beautifully. You can use the candle or this low right here. Price came into that beautifully and it continued its move to the upside. But overall, we are still showing that bearish behavior. So price could easily be drawing to this high right here. Take out this high at 25.03. Let's look at the daily. Yep, these highs right here. Fill this daily fair value gap or come up to this institutional candle that we can see right here. This was the push to the upside, so I would draw it out like this. All right, we can see price come up into those areas, show that 4 hour, break a structure to the downside, and then we can look for those shorts into those areas of liquidity overall that we have been looking for. And then after that, we are looking for that higher time frame reversal to then get everybody out of their longs. They think crypto's been accumulating for this long, right? And it's dead. It's still going lower. So they all get in the shorts. They decide to go for these prices, right? They want 9K. Right, they want prices down here, 8K. They're talking about all the space that we have right here. So they're going to look for continued shorts to the downside, and we'll look for a liquidity raid and then a break of structure to the upside. And as price is making this move to the downside, we want to look for price, again, to be very, very, very lethargic and then make its move to the down. As it's making its move to the downside, to then show that creation of buy side liquidity for the reason to price to break structure to the upside and then continue to the upside following, as it will have all of those shorts, all that liquidity to then grab after that. I'm going to go ahead and check the stream chat real quick. Dojang was saying, when do you focus on trading for crypto? Okay, so crypto, yes, I do consider a session when I trade. And the reason I say this is for that job-like mentality, right? When I first got into trading, I'm sure when you first got into trading, or when a lot of traders first get into trading, they don't really think about time. And they're like, whenever I can trade is whenever I open my phone and look at the charts, right? Or whenever I open up my computer or laptop and I can look at the charts. That should be when I can trade, right? But the issue and what this causes is, and what I mean from my personal opinion, is that it causes you to now create scenarios that aren't there. And what I mean by that is, if you are coming home from your job after work, right? And I'm using New York as the example for this, but if you come home after work, it's 5 p.m., right? And you're looking to trade Forex just because you can, is that the smartest time to trade Forex, right? Because that's spread hour. And now all of a sudden your positions that you open aren't going to move, and two, you're going to be feed a lot more. Also, how I look at sessions based from an institutional perspective is I'm looking for the manipulation, right? The liquidity raids before the breaks of structures. So times that I'm looking for those liquidity raids are going to be times that hold the most liquidity. And times that hold the most liquidity are going to be session times, as that is when most traders, right, are looking to trade those certain assets. And I'd like to, for Forex, you can pair it with the session you are trying to trade, meaning that if you are trading USD JPY, you can look for it during New York and look for it during Asia, as that's when it's most likely going to move, Japanese currency and US dollar currency. If you are trading, right, EU, then I would look to trade it during London, as your largest moves are going to occur during then. But the other thing that is good with sessions is that now that you are only looking to trade 1 or 2 sessions, right? And I personally only recommend really 1 session. Now that you're looking to trade just 1 session, you're coming to the charts at the same time every single day. And that creates that job-like mentality. So now we're looking at the same thing, looking for the same thing at the same time. So now I can schedule my life around trading, and I can schedule trading around my life as well. Right? And that creates that comfortability, as well as that repetition, which then dominoes into confidence, which then dominoes into profitability, right? We can start to see where that starts, where it's built, and then where we can look to capitalize upon that, right? He's saying, when Casper explained the point at 3, we all know reality is not exactly equal out of our textbook concept, because context is key. Okay. So you're saying for an Asian session, as far as what you are looking, Asian PD array. Okay. I do believe that, and I'm not speaking on Casper's behalf. I don't know if he uses this for all. But as Power of 3 goes, I do know that he talks about indices a lot more than he does others. And indices are going to be most dominant during New York session, which I do understand, which is why it would be difficult for Asia session, right, to get in those indice trades. But indices still move during Asia session, right? I'm not saying that those plays aren't present just because it's not in session, but when I want to look for plays is going to be during a session, because that's when those larger moves are going to occur. You can also look during news as well. Those are all drivers. Those are all catalysts, all reasons that you see price have those large expansions, as it gets a lot of liquidity into the market in one direction. Meaning if there was news on this day right here, and it was bad news, everyone was like, oh no, I'm going to short, I'm going to short, I'm going to short. So they put their stops over these highs and these highs right here. And that causes that large pump into those highs, and a large quick pump, right, into those highs. So as we're looking at the charts, trying to understand it from the session perspective, find your, and this is different from Casper and I, because I know he follows a little bit more of ICT concepts than I personally do. But find your higher time frame bias. He talks about the draw on liquidity. I talk about higher time frame market structure. Both are going to be very similar, meaning if he says the draw on liquidity is this high right here, I'm saying we're in daily bullish market structure. So until we show daily bearish market structure, we're going to draw to the highs, the weak highs, right? As this low created this high. So if we hold this low that created this high and then create new demand, this weak high could be taken out. Whereas he talks about the draw on liquidity into an area of imbalance, right? So it's all, you can all start to see where the context may seem different, right? But it's the same behavior. The chart is still moving the same way, right? I talk about institutional candles, so the push to the upside before the push to the downside. Other traders, right, talk about order blocks as the push to the upside before the push to the downside. They're called different things, but in reality, at the end of the day, it's the same exact behavior. The draw into these highs right here, into the buy side liquidity, into the weak high, into this area of imbalance, into the institutional candle. So this is what I'm looking for Bitcoin. But when we are looking for sessions, try to figure out just one session that you like to trade, and then constantly, right, look for those setups during that session and trade only during those times, because now you're going to be on the charts for 2 to 3 hours a day. You've had your good 2 to 3 hour workday, and now you can revolve your or trading around your life, and now you're not constantly just looking at charts at random times, right? Creating different plans for no reason, and it doesn't seem like you know what you're doing, and then you get into that loser cycle because you don't think your strategy is working. But find that one session that works for you. Find that pair that's going to work for you as well. I know for cryptocurrency specifically, it moves during all sessions. It's going to move during Tokyo session. It's going to move during New York session. It's going to move during London session, right? But personally, I have seen the largest moves occur on New York session after news drops have occurred, and that's just for Bitcoin. And appreciate you, Anonymous Bread. But yeah, find that one session, because now you're looking for the same thing, same time, every single time, and now you've made trading a job. Now you've made trading something that you were looking at the same time every single day, and now you can start to log that, right? Because now you're saying, now I'm only going to take 2 losses during one session for 3 hours, right? So now I already, yes sir, take one session, repeatedly trade it. It's going to change your life. I promise you. Because you go look, and you can see this is true with the asset pair as well. There are traders out there. I know probably personally the most profitable traders I have seen out there, just on social media and just looking around, seeing people in Playbit, are people who choose one session time and one pair, and they have one strategy that they have constantly honed over and over and over again. So now they're looking at one pair, one time, trading for the same amount of hours every single time, putting their trades in, logging them down, putting them in their journal. If they lost, they do it again tomorrow. Right? They're not even thinking about it. And now you start to get that robot-like mentality where it's just, I see it, it's there, I'm in, I'm out, let's go, right? And it's simple. And that's when it becomes easy. And also, another way to do that is to take that hype away from it. Because now that you're looking at the charts over and over, yes, at the same exact time, it's going to make it boring. I promise it's going to make it boring, but boring is good. And that's where your career is going to take off, because now that you've made it boring and repetitive, now you have that same system that you're looking for over again, over and over, right? So keep it as simple as possible. Stick to one pair, stick to one session. And then when you start to become super, super comfortable, right? And you have those days where you're like, maybe I'll look for a Tokyo session scalp today, because you have that time, right? And you've made a bunch of profits on the week, and you're okay with risking 0.5% on a Tokyo session, right? Or this will be correlated to where you live as well. Let's say I was here, right, in the US on Eastern time, and then I decided to move right to California. Then that would change, right, when I'm going to be up to trade New York session, I'm going to have to wake up earlier, right? So I can either one, decide to trade Tokyo session and find a good pair on Tokyo session, or even London session as it's 12 a.m. In California, right? Or two, wake up earlier. So now you can start, right, to affix what type of pair you're trading and when you're trading it. And once you're super comfortable with that, you will start to see how much profit that you guys can pull off from a single pair with only 2 hours of trading time daily. It's nuts. It's insane. I promise you. But this was Bitcoin as far as what I'm looking for. Delivery up into this area, this institutional area. These highs before the new low was created right here. If we hold that, break structure on the daily as well as the 4 hour. So I'll be looking for 4 hour really within this zone. Then I'll look for continuation into the daily relatively equal lows that we can see here, as well as the monthly equal lows that we have here. And then after that occurs, we'll look for the break of structure to the upside with impulse to then finally look for a possible reversal on cryptocurrency, right? But that was Bitcoin. We talked about ETH as well. I want to go ahead and now get into US30, and then we'll get into XAU as well. Our bias is moving beautifully. I'm gonna go ahead and look at stream chat real quick. Okay, LNM was asking, why does accumulation take longer than distribution? Is it because people are more willing to long than short? Okay, so I wouldn't personally say, or I couldn't personally call it as it's because more people are willing than they aren't willing. I do know it is personal to everybody as far as how choices are made, but I do know that the market moves off of choices, meaning it moves off of emotions. That's how liquidity is ran. That's why liquidity is ran. But as far as accumulation versus distribution, just based off of backtesting, based off of how the markets have shown themselves over time and printed themselves over time. The reason that I personally believe that accumulation takes longer than distribution is because accumulation, when we have manipulation of lows over highs, we tend to see that creation after a new low is formed. Meaning when we have distribution, like for instance, when we have distribution up into these areas, so we had a institutional raid to the upside right here, this low that caused this high, we came back up into that area, but we had this accumulation down here as well. We say, why does accumulation take longer than distribution? And this is just purely from backtesting, purely from looking at past candlestick actions, how that occur. And the reason why is because it really grinds traders who are trying to get long, and that might be because more people are willing to be long than they are short. And the reason I say that as well is because of where we are with Bitcoin, meaning that we are literally in the out of our entire run to the upside, our higher time frame run. So everybody does want to long, meaning everybody's trying to long at these lows right here, whatever zone they can find, and try to correlate that to whatever they are looking at. But when we are in premium, you'll notice our distributions take much quicker than distributions within discount. So accumulations within discount are going to take longer. Distributions within premium are going to take shorter. That's just personally what I have seen from backtesting and from watching these charts develop over time. Now, I personally have a year and a half, not even a half, of experience. So I can't say that as a rule of thumb, rule of fact, but when I'm looking at accumulation versus distribution, you'll just notice with accumulation, over time, it does seem to take longer than distribution does. As we can see here, this accumulation to then distribution before the move occurred on a bearish overall time frame was where is my price range? Here we go. But we had one here. It's about 13 days. The accumulation before that took roughly just around that time, 20 days, and then price made that accumulation, distributed in about half that time, 3 days over that. Accumulation here, distribution occurred right here. Let's find this price range and draw this one out as well. Accumulation into the highs. Once the high was ran right there, I'll drop it off from there. So 37 days on that one. And then the distribution following on a bearish market once we started it from here. Right, 21 days after we ran these highs right here and then distributed. So I'm not saying that as yes, every time it takes longer, look for accumulation, or yes, every time it takes shorter, look for distribution. We still follow our rules as far as market structure goes. We're still looking for what it's leaving behind, meaning our highs being manipulated and lows being left behind, or our lows being manipulated and highs being left behind. Dojang was saying fixed daily routine, what we trade, when we trade. Yes, sir. Enjoy life. That's exactly how it is. So that one's actually beautiful. I'm so glad that you introduced or talked about kill zones. Sorry, because I have these kill zones actually. I don't know why they aren't being shown. Let's see if I can pop these out. Well, I'll delete these and then add new ones in. But I have these, it's called ICT kill zones. I believe it is this one. Actually, I think I just looked up kill zones. Kill zones. Yep, this one right here. So I'll go ahead and favorite that as well. Bring this down. But I do like the little ICT kill zones indicator that I have right here. The reason I do like this is because as for the kill zones, as for what ICT looks for, you can look for entries around these same exact times, meaning on XAU, and this one's a beautiful example, during session times is when you'll notice that price has those large moves, meaning look at these kill zone indicators at the bottom when the most liquidity is in the market, and you'll notice when price is having its moves, right? Look at where the supply was created right here on this kill zone, right? On this London kill zone right here, and then price made the lower low. And then our next session came into play and we created a new high. Next session came into play, created a new low. Next kill zone came into play. We rated lows and then started to move higher, right? Next kill zone came into play. There's our entry. Look at these entries and then look at the kill zones as well. Look at this entry in the kill zone after we ran highs, right? So when the most liquidity is in the market is when you'll start to see the algorithmic manipulation, meaning they're not always in there unless they are market makers always in positions, right? So notice down here, right? Again, price came up into the area of institution during a kill zone, break structure to the downside, creates supply, has everything that we are looking for, and then has its move to the downside. So now that I can look for this certain behavior during certain times, all I need to say is, okay, what is my higher time frame look like? It is called ICT Kill Zones. It is by Evan something. Here we go. Or Enrico Amato 9. It's called ICT Kill Zones. I have it down here at the bottom. You can like change it and move it if you want to as well. You can change the colors. But it's pretty cool, pretty neat little indicator. You'll see literally when all of these setups occur, right? Liquidation to the downside during London kill zone. Wait for New York, right? We get a break of structure to the upside. I have my institutional candle. I wait for price to come into the institutional candle. It's New York. I'm like, what do I do? What do I do? What do I do? Go to the 5-minute chart now that I have the 15-minute break of structure to the upside. Wait for the 5-minute break of structure to the upside, right? We can see it right here. Break right here with impulse during my session time, right? We talk about 8:30 as well. Wait for the 8:30 move. Where's 8:30? Boom. Here comes 8:30. We have a break to the upside, right? Now that we have the break to the upside, I'm saying, okay, I'm going to set my longs positions right here. First, targeting the weak high that was formed here, right? And then second, targeting the higher time frame, draw to that institutional candle, the areas of supply that we were looking at over here. So the liquidity that we have here into that institutional candle. And then now I'm good to go, right? I can enter my trade at 8:30. So I come to the charts at 8 o'clock, wait till 8:30. 8:30 is shown. I'm in my trade at what? 8:50. So 20-minute workday, right? I'm in my trade, and then I walk away, and then the trade goes to take profit, right? In roughly 2 days, right? It goes to your take profit. 32 to 1 trade, you're done, right? That's literally all you need. So now you can wait for your higher time frame setup to occur and then wait for everything to come to play. So when you're looking at session times, right, and this can be whether you're a scalper, whether you're a swing trader, whether you're an intraday trader, this is going to be different, right? Casper focuses more on intraday, so he talks about the daily draw a lot more, right, than I'll be talking about the weekly draw, because I'll be like, the weekly chart is still not showing me a break to the upside, so I'm still not looking for moves to the upside, right? Whereas Casper could say, I'm looking for price to come to the upside after what it's showing me, or after what it's shown right here, right? And he could be talking about a draw into an area of supply before price makes a lower low and then continues to the upside. So it's both, right? They're both very similar. They're all the same type of behavior with all of these mentors and all of these teachers and all of these terms that you guys see out there. The kill zone indicator is by Aaron D something, or sorry, En Rico Amato 9. Yeah, it's right here. As far as what that is, I'll post that as well later. But I do really love this kill zone indicator. I might have to change it again. Yeah, 2 to 5, New York from 8 to 11, London from 10 to 12. Age of start 20 to 24. Yeah, so that's 8 to 12 as well. Okay, perfect. But yeah, 2 to 5 for London. 8 to 10, or sorry, 8 to 11 for New York. You can throw in that London close if you want as well, to also find entries, right, into London close. We can see just before lunch hour hits and we start to get slow. But now you'll notice, right, look at the times that we're out of session and look at what's happening during those times. Out of session, what are we doing? Accumulating. Are we showing large moves? Are we showing huge breaks and structures to the upside? No. Session comes in, now we have the move. Session comes in, now we have the move, right? So why am I stressing myself out by even looking at the charts during these times, right? Trying to come up with something that isn't there, right? If I'm looking over here and I'm saying, well, I want to take a long because this low caused this high right here, and you try to take a long, and you're taken out of your trade, now you're like, shoot, well, I'm going to short when it comes back to this high. So you short it, and then price shows you a little bit of what you want, and then it takes you out. So you're like, maybe you just had to raid the highs first. So then you short it again. And then it just goes, right? Crypto, yes. We'll use an hourly chart. Actually, I'll use the 15-minute. Crypto as well. So we'll talk about when the entry occurred. I don't know if it is drawn differently on this one. No, 2.5. Okay, perfect. But yes, also sessions as well. You'll notice that crypto will start moving during sessions. But during our session, we have our liquidity raid to the downside. 8 o'clock hits, and I do believe this is off on the bottom right here, because we can see that 8 o'clock is right here. So this is still during that time. But 8 o'clock hits. Where's 8:30? Right, 8:30 is right here. So I come to the charts at 8:30. I wait. It's been an hour, right? Price break structure to the upside. I look for my area after that on the hourly. You can see right here, area of demand. I enter my trade at 10 o'clock. I walk away. Right, we'll bring this back. We'll look for another trade. Can show these over here. Go back to the 15-minute. Now it's not even showing me it, but we'll look at the time. Right, again, wait for your opening. So we'll wait for 8 o'clock. Here's 8 o'clock. Where's 8:30? There's 8:30. We have a raid to the upside right here. Then we have our raid. New low is formed. So now that the new low is formed, we're still in session, still in time. This is 10 o'clock. So you've been at the charts for about 2 hours, 2.5 hours. Entry presented, right? And now you guys can understand why why you see, right, traders out there that are only trading 2 to 3 hours a day, or traders out there that only have 20-minute work days, because they're only at the charts during that time, right? And they're looking for the same thing, whether it's a raid, then break a structure, right? Or they're looking for a breakout or EMA cross, whatever they're looking for, right? They're looking for that at the same time. So pick your guys' session that you want to trade it over and over and over during those hours, and you'll start to see how much you'll be able to prosper from that, right? Because now you have the same time of the day you're going to trade. You're looking for the same thing. Nothing's different. It's boring. It's repetitive. It's like a job, right? It's like you're going to your job. And now you've made trading a job. And now you can treat it like one, right? Now the only thing that's left is for you to follow that discipline. So now create your rules. And now that you have your job as well as your rules, all you have to do is follow those. And there you go, right? There it is. As simple as it's possible. As far as what to look for, as far as how to look for these setups. But keep it simple, right? That's as simple as I can make it. It's just coming to the charts at one time, looking for a few hours, looking for the same thing. Once it's found, enter, walk away. Dojang was saying enjoy life till 8 a.m. One if there's a lick raid, wait for the break of structure. I see. Yep, perfect, beautiful. And then wait for the retest and confirm the demand. That's exactly what I want to get into as well. After I get into XAU and talk about the higher time frame, what I'm looking for. Okay, so let's just go over kill zones real quick. But after I go talk about XAU, I'm going to talk about in theory and with candlesticks what price does over and over and over and over. So for the creator, oh, got you. It was AN something. I'll show it up one more time. Or sorry, EN. Enrico Amato 9. It has 876. Yeah, it's just, I just looked up kill zones and it was the one that said ICT kill zones. It's ENRICO AMATO 9. And then I'm sure there's more, but it doesn't show. No problem. But start NY. Yep, start NY 8 a.m. and leave before NY lunchtime. Perfect. Exactly. That's what I'm looking for every single time. Now you can trade the PM session, right? As that's still technically when New York is open, but that would be right based off of your life. Let's say you work during the mornings, then you can come back, look to trade the PM session, which I do believe is, I want to say it's 1 to 4. 1 p.m. to 4 p.m. Eastern. I'm not 100% sure on that one, but I do want to say it is that. But anyways, you can revolve that around your life, right? Whether it's AM session, whether it's PM session, whether it's Tokyo session, whether it's Asia session, or sorry, those are the same, sorry. Once it's London session, right, versus Asia session, correlated to which pair you're trading as well. But those kill zones are going to help beautifully because that's when the most liquidity is going to be in the market. So NY midnight, 4-hour candle close. Personally, why I don't look to trade midnight price is because I look for manipulation of midnight price. And what I mean by this, and gold is a beautiful example, is as we had 4-hour bullish market structure, right, coming into these areas, and you'll notice it does it here as well. We had 4 bullish market structure after we were coming into these areas, so we're looking for now 15 for the switch, right, the market structure to the upside. But I look for the manipulation of midnight price, meaning on Tuesday the 25th, where is midnight? Let's go ahead and look for midnight. In the opposite, when I say manipulation, wherever your market structure is, if it's higher time frame bearish, then look for manipulation to the upside, meaning it takes out buy side liquidity, mitigates your zone, and then you can look for the short. So it's going to go if you are bullish, right? So let's look at our midnight price, which ended right here. We'll draw out the open of that candle. We'll bring that out. So if I'm bullish on XAU, where do I want to look for the manipulation of midnight price? To the downside. Where's the manipulation of midnight price? To the downside. What do I look for next? The manipulation of 8 o'clock price to the downside. Where's 8 o'clock price? Opening price of 8 o'clock. Is it manipulated to the downside? Yes. Where can I look for my trade? After the liquidity raid. Bullish market structure, liquidity raid, demand. Take trade to the upside. Is it in the kill zone? Yes. Where's 8:30? Oh, look at that 8:30 delivery right into the zone. Right after, move to the upside, right? So if I get to the charts at 8 o'clock, I look for the raid to the downside. I can look at this one and say, okay, we manipulated it to the downside, manipulated to the downside. We're in bullish market structure. I have my institutional candle. After that move to the downside here, I can look to take this higher. I take it higher. Boom. Trade's taken out. Hits my TP, right, within 2 hours, a few hours right here. And these moves, man, I'm 21 ticks. From 1640 right to 1662. 21 ticks on a 5 lot, right? You're looking at $500 per tick, 5 times 2. You're gonna add around near 10,000, so 10%, right? That you would make on a 100K account, risking 1%, right? With 5 lots on this move to the upside right here within a few hours during the session. With what did you have? This was like a 15-minute workday. Right, if you had entry with a year. But with midnight, I don't look to trade exactly during midnight. I look for the manipulation of midnight price counter to my higher time frame structure as far as midnight goes. That's also something that ICT teaches. So if you are super confused about midnight and 8 o'clock price, you can go ahead and check out his mentorship as well. He does have good information as far as how these prices are manipulated before the expansion move occurs. But with XAU, and I'm glad we're looking at it now, but I'm looking for delivery into this institutional candle. What I'm seeing here is already beautiful as we're creating a lot of buy-side liquidity coming lower. So we could see price either one, take out some buy-side liquidity and then make the move lower, create some more into discount, and then have our push to the upside. I'll be watching the M15 for liquidity raid to the downside, and then that push to the upside will most likely hit during London. I'll look for Tokyo to be raided to the downside, as Tokyo with XAU tends to consolidate more than it does have large moves. It does have large moves, but it will tend to consolidate over the other. But we are starting to have our first mitigation. Once we have our mitigation, we'll look for a liquidation and then the creation. So it's mitigation, liquidation, creation over and over again. Mitigation, liquidation, creation, right? Over and over again. Liquidation, mitigation, creation over and over again. 1, 2, 3, 1, 2, 3, 1, 2, 3 at our times that we are looking to trade. So now we've made it easy. Now we're looking for the same thing. And all I'm worrying about now is higher time frame structure, right? I have my entry available. I understand the model, right? Everything's cool. It looks good. Now where am I going to take this to? Well, we'll look at higher time frame structure, and then we can find our take profits based on that, and then we can walk away, right? So these instances are going to come up, and then you have some, right, where your entry is presented. It's not going to make the full move that you want to see, and then it's going to consolidate. Some where it's going to have the full move, right? But when those kill zones open up, when there's more liquidity in the market, is when you're going to see those larger moves. You can literally just throw on this indicator, right? Throw on the sessions kill zone indicator, and then just scroll back. Just look back in time, and you'll be able to see, oh, there was those entries that he talks about, or that I've seen, right, available during those sessions. It's crazy, right? When I'm looking for those trades during those sessions, there are going to be times out of session price makes moves, but when I'm looking to trade, it's going to be during those sessions. We have to discipline ourselves to not look to trade those. Okay, so what are your thoughts on trading silver compared to gold? I'm not going to lie, I really do love silver. I love the way the chart looks. I love the way it respects supply and demand. But the only issue I personally have with silver is just the spread that I am personally offered. So if you have good spread on silver, I wouldn't go away from that. I do really love how silver moves. And the reason I say this is it's the same with others, but it shows market structure very well, right? You can look to play this pretty easily. Institutional candle right here, move to the upside, right? Break a structure to the upside, comes back down into the institutional candle. We can see right here. And then after that, break structure to the upside, comes into the demand candle and has a move away from that. So I personally don't believe, right, that one is better than the other. I think it's whatever you believe is better than the other, meaning whatever you are more comfortable with trading at those times. But silver is very much tandem to gold, meaning if gold is mooning, right, silver is most likely mooning as well. If gold is dying, silver is most likely dying as well during the same times as well. But I'm personally not offered the best spread on silver, so I don't look to trade silver, which is why I've stuck with gold. With silver, New York is going to be your friend as well. You'll have your largest moves during New York session for silver over other sessions, but I really do like the way that it moves, respects supply and demand very well, and shows liquidity rates pretty clean. But I like both, right? But I just like XAU over the other for spread purposes. I also really, and this is another one that nobody talks about, and there's a reason that nobody talks about it, right, is platinum. I love the way this chart moves. I love the way it looks, but these spreads are so bad that I would never touch this with pretty much any broker that I can find. But beautiful, beautiful chart platinum is. It just moves beautifully. Liquidity rate to the downside right here, right? We can see price came back into that area, made a new high, demand candle here, just continuously showing and respecting supply and demand. Also another one that I love but cannot trade, unfortunately, right? So I don't think that it's necessarily bad to trade it. But if you're offered some great spread, then go ahead and go for it. Go ahead and go for silver. But I just like XAU spread over silver spread. Sometimes I get better silver spread, but since I'm more comfortable with XAU as I've been trading it a lot longer, more repetitively, then I'll be trading XAU. But as far as XAU, I was looking for delivery higher into this higher time frame institutional candle here. I do think we are going to move into the weekly institutional candle here. We can look at the weekly and see this fair value gap that we had left behind right here, as well as the institutional candle just before that. So I can see easily these highs being taken out, and then us possibly creating demand, making a move higher into areas of supply, right, that possibly started to move, because overall, you know, we're still bullish with gold. But until that happens, can't call it now, right? We'll wait until we can see that happen, see that occur. But on the, and I mean, you can look at the 4-hour time frame too. It's the 4-hour candle before candle that broke structure to the upside. So if you guys wanted, right, you could look for the 15-minute break of structure to the upside within this zone, put your stops underneath these lows, or use the 15-minute or the hourly once you are in this zone here for more confirmation. Yes, sir, 100%. This was recorded, so it will be posted to YouTube after that, after it is done here. But with ETH, with Bitcoin, and with US30, they're all pretty much lining up. And the reason I say this is because we are coming into an area of fair value on the daily time frame, right? We're actually in that right now. We can look at the weekly and see that supply zone that we are in right now. The reason that I am looking for price to make a move off of this zone right here, it doesn't have to, remember, but this is where I'm looking for price to make a move off of this zone, is to create buy-side liquidity. So to create some equal highs within this zone, it will create more trend line liquidity on a daily time frame. We'll come down, take out the week low into our weekly institutional candle, and then possibly have that move to the upside after that. So it's the same exact thing as Bitcoin, looking for, right, price to mitigate supply, continue to the lows, and then make the move to the upside. US30, price to mitigate the area, continue to the lows, and then make the move to the upside. ETH, price to mitigate the area, continue to the lows, and then make the move to the upside. So now you guys can start to see how it's the same thing over and over again. But with Bitcoin and ETH, how they're tandem, right? Two indices, and how they can start to be showing the same exact idea, the same exact trend, right? Same thing, different story type of scenario. So that was Bitcoin, that was ETH, that was XAU, and that was US30. Another one, and I'll talk about this one later because I'm not really looking to take positions on that one just yet, but is GBP NZD. higher time frames in our weekly zone. If we mitigate this institutional candle up here, take out some highs, and I could look for some beautiful, beautiful shorts back into this area of demand. One, it could continue into the lows, or two, it could hold that demand and start a new possible reversal to the upside. But I'll be watching this one closely. This is still the daily chart, so it's still taking some time as far as this is gone. Ever since I've told you guys about this one when we first mitigated this zone in September, I've still been watching it, still been monitoring it. So once that starts to come into play, I'll look for entries and exits on this one. GBP NZD, I've been loving this one as well. It pays, man. It pays very, very quickly. But this one does have some higher spreads as well, which is completely fine in a lot of scenarios if we're risking less. But with GBP NZD, I do like to risk a little bit less than I would on XAU or ETH or US30. But with that being said, I appreciate everybody who had came out today. Unfortunately, I am going to be out of town tomorrow for Halloween weekend. Happy Halloween as well to anybody who is celebrating Halloween. But I will be out of town, so I probably won't be looking for entries or exits during that time. Once I am back, I'll look to reassess everything, see what is going on. Once I am gone, I'll probably be following gold the most. I'll still have my alerts and everything going, but we have this impulsive move to the upside. I do want to see continuation to the upside. On XAU USD, we have our mitigation of our institutional candle. We have a break of structure to the upside. We have the mitigation of that demand candle. We have another break of structure to the upside. So we should start to see price in a higher time frame, large expansion mode. So a lot of opportunities on this one for moves to the upside. As far as XAU goes, this one will be the one that I'm focusing and monitoring the most. So again, thank you to everybody who had popped out. I appreciate all the questions that I got today. That was awesome. I love the interaction. You guys asking these questions keeps me going, helps bring new ideas for what I can teach. So it doesn't just seem like I'm looking at or talking about the same thing over and over again, even though it is, right? Even though I am going to sit here and tell you guys institutional candle, demand, supply, right, every single time, because that's all I'm looking for. But no problem. Thank you guys. If there's any questions or anything like that you guys were not able to get to, you want to get to me, let me know. Feel free to do that in DMs. You guys can do it in stream chat and crypto chat, wherever as well. It's completely fine. I'll try to get those answered for you guys. This will be posted again after. And thanks again, guys. I will catch all of you later. If I try to find entries and exits before tomorrow, I'll let you know, but it's probably going to be that I'm not going to be posting anything this week as I'll be on vacation. But again, I appreciate all of you guys. I hope you have a great rest of your day or night, and I will see you guys soon. Peace out, guys. Thank you all.